Good morning. Welcome to Finance and Bagel. Today we're going to try to answer the $1,000,000 question. Should you buy Tesla or should you stay away from the stock? Yesterday the stock was down 5% and year to date since January the stock is down 33%. As I mentioned in yesterday's video, the stock is an underperformer. It's the worst performer of the S&P 500 this year. So before we try answering this question, should you buy Tesla or stay away from the stock, I want you to understand in very simple terms the business model of Tesla and the business rationale. When you think about this business, it's very simple. It's a car making business. So the business component is that they have a volume, they have vehicles times prices, and that gives them a profit. Now, what happens in any businesses when volumes are down and prices are down? Well, essentially, you're going to bring home less profit. So obviously less profit, investors are not going to like it, and your stock is going to tank. And essentially, that's what happened yesterday in very simple terms for Tesla. So what happened is that they reported their production results for the first quarter of the year, and essentially the market, so investors were expecting them to be able to produce 450,000 cars, and they came out and said, whoops, sorry, we only produced 387,000 cars. So we were like, okay, where are those 63,000 cars we were expecting? Well, not there. So if the volumes are down, we know that obviously they're not going to be able to sell that volume, so they're going to miss on profits. So investors are going to get less money, so the stock is going to tank. Now they mentioned that they have problems at some of their factories, also in Berlin, some shipment problem in the Middle East. So for different kind of reasons, they were able to produce less cars, and that was a concern for the market. Number two, for Tesla's concerns yesterday is their inventory. We noticed that inventories are increasing at Tesla, and essentially, inventory, what's giving you as a signal as an investor is that demand is decelerating. So it means that consumers have maybe other options, for an electric vehicle, maybe they can go with another company, and in that sense, they're not buying your product, so your product is staying in the inventory. So for an investors, if you have produced your product and the car is there, but you're not selling it, you're also not bringing the profit home, so that's a negative for the company. So there was really two negative data yesterday on what they announced, and we think, should you buy Tesla as a stock or should you stay away from it is a $1,000,000 question, because it depends on your investment horizon. This year, we know in 2024 is going to be a challenging year for Tesla. So if your investment horizon is very short, we think it's going to be difficult this year for Tesla to exceed their target. They have a 2 million vehicle production target, and we think the start of the year was really bad, so they need 3 good quarters to catch up and exceed that target that we seem it doesn't seem very achievable from this point of view. And second of all, if you have a very long-term horizon, you might think okay, this is a good point, this is a good entry point. The stock has been weak over the last few months, and I want to keep the stock for 3 years, 5 years, 10 years. Then that's your personal choice, that's your call. But we know that this year it's going to be a difficult year for Tesla. So we hope this answers many of your questions. Obviously you need to be safe out there when you trade. If you like the content, please like, subscribe, comment, activate the notification bell, and let us know if you think that Tesla are going to be able to produce more than 2 million cars this year, or you think they're going to come short of that target, and in that case the stock is not going to be a top performer this year for sure. Have a good day. Bye bye.